Patrick and I just finished recording a great episode with Catie Lawrence. She came to talk about her start in real estate and what she was able to do to reach financial independence. Currently, her path is towards accumulating a couple of lifestyle properties, investments that are going to allow her to kind of live a life that really means a lot to her. Patrick, what do you think about today's episode?
I thought the episode was absolutely fantastic. It just goes to show that everybody's financial freedom number is at a completely different level, and it's really what makes sense to you and your goals. And now her goals are all lifestyle goals. So make sure to listen to the end. She breaks down all the awesome resources that helped her get to where she is today, and I'm sure you guys are going to love it. And here it is, everybody, and welcome back to the Real FI Podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
It's going well today, Patrick, and I'm excited, as always, every week for today's conversation. I think we're going to have a really good one. Today, we've got our friend Catie Lawrence here, and she's going to be telling us a little bit about what she does, her background, and kind of some of the investments that she's currently a part of and working towards. So without further delay, Catie, why don't you go ahead and introduce yourself and tell our listeners a little bit about what you've got going on.
All right. Yeah, James, Patrick, thank you so much for having me. You guys have had some heavy hitters on here, so humbled to be here. A little bit about me and my company. Happy Homes Limited is a real estate investor company. My husband and I started in 2015. Currently, we are just managing some long-term and a midterm rental. I'm a real estate agent. I'm an Airbnb superhost. We've fixed and flipped multiple homes in the Denver area. And I'm also a financial freedom advocate. So I've been on that journey for quite a long time now. So a little bit about me.
Perfect. I love it. So why don't we talk about kind of what your portfolio looks like right now? Like how many units you got, what do the single family count look like what size properties? Tell us a little bit about that.
What's going on? Yes. So currently we have 5 properties, one being our primary. We have 3 long-term rentals here in Colorado, and we have a midterm rental. 3 long-term rentals, 2 in Colorado and 1 in Philadelphia area, which is where we're originally from. And then we have a midterm rental here in Colorado as well. We have a condo, a townhouse, a single family, 2 single families. So that's a little bit about our current portfolio.
I love that. I mean, it's a great mix. You can kind of hear the journey a little bit, which I know we're going to get into. So let's rewind this back a little bit and give us a little bit of the backstory around you and your husband and why you guys even started along this real estate journey.
Yeah. So I purchased my first townhouse back in Philadelphia area in 2006 and had roommates. When I was a girl, it wasn't called house hacking. It was called having a roommate. I'm a little older, so, the OG. And then in 2012, Airbnb kind of came around. So I didn't have a roommate anymore. Mike is my husband. We were living in the townhouse and started renting out a room in the townhouse. It was actually very close to a medical testing center facility. It's only 2. There's only 2 in the whole country. So location. So it did pretty well. Didn't do it for a ton of time, but about 44 days made around $2,000, which is not a ton of money. But back in 2012, it covered a few bills. So kind of got a taste of, oh, wow, this is covering part of our living expenses. So I had a W-2 job until September of 2021. I was able to leave that. And that's really how I started in real estate, just very, very slowly. I know that you guys talk a lot about, it can take one property to change your life. And really it was a long journey. So started in 2012, renting out that room. We moved to Colorado in 2014, and my husband's a contractor, so that is very helpful in the fix and flip journey, and the rental and the renovations. So we moved to Colorado. He had to basically start his whole business over, and we got our current house that we lived in every single room in the house, kind of Like, okay, the kitchen's done. Okay, great. Like, let's move into the kitchen and, start on the bathroom. So that's a little bit about how we got started. I've rented a room in my house, since 2012, picked it up back in 2016, and I have some real numbers if you're interested in that.
Well,
Um,
let's talk about that a little bit because
yeah.
I think that's such a unappreciated way to get started.
Oh
People,
yeah.
they're either renting or they own a house and they're
Yep.
stuck and they might not have the capital to put into the first property. People really overlook the aspect of maybe even renting out one room in your property that you already own. My wife and I, we did that.
Yep.
We had some hurdles and obstacles that we went through mentally and practically with
Oh
doing
yeah.
it. But why don't you talk to us a little bit about that, like your journey to actually deciding to rent out one room and
Sure.
kind of what that did to set you guys up for your future success?
Sure. Yeah. Again, kind of got a taste for it back in 2012. I mean, Airbnb started in 2008. So I was a very early adopter because I myself was using it. We were using it to travel around the world. It was a great way to travel. So in 2016, we started doing it again. We were just renting out a guest room. We rented it for about 38 days. Again, not a ton. This is throughout a year, not a ton of time, but made almost $3,000. Again, covered some living expenses. I was still working a W-2, and I've always been an aggressive saver. So it just allows you to save a little bit more or put money towards another goal. So you're saving for a vacation. It just helps cover those utilities. So in 2017, did it for 54 days. In 2018, did it for 26 days. And at this time, we had started our company. 2015, we started our own real estate investment company where Mike was flipping homes. So on top of getting the income from the flips, we were able to reinvest that equity into purchasing homes, sometimes cash. And again, it just helps cover living expenses. I think living can be very expensive. We're here in Colorado, right, a little west of Denver, and it's just a high cost of living area. So it just again helps cover a lot of expenses.
How was
More
your
and more. Oh
home
yeah, go
setup
ahead.
for that? Was it, just one room right down the hallway from you guys, or was it a totally separate living quarters with a kitchen?
No, so we have a garden level home. So we have basically four levels of our house. We're upstairs. There's a middle level of the kitchen. Then there's the garden level, and then there's the washer dryer. So the room that we were renting was in the garden level. And truth be told, Mike did not love this. He really didn't like strangers being in the house while we were there. Just it can be a little, it's an adjustment. You have people in your home that you don't know. So again, we did it for a little bit, and then we started doing it while we traveled. So set the house up so there were lock offs. We have a great location, again, very close to a little old town. We would lock off our basement. We have a lot of gear. We're in Colorado, so big skiers. Everyone always says, like, what do you do with your personal stuff? So we set up the house to do that, and then we started short-term renting it while we were out of the house, and that worked a little bit better.
I love that. When my wife and I, we did the similar thing. We rented out one room in our house,
Yeah.
right on, but everyone was on the same floor. So it was even more
Yeah.
awkward.
Uh-huh.
So there was this huge, like, nervous thing where we were thinking, like, wow, what's going to happen to us? Are we going to have some crazy person come in?
Yeah. You
It
never
all worked
know.
out good. The worst thing that happened is, one day we saw one of our Airbnb guests, like, walking our dog in town.
Oh,
So I was like, we're a little thrown off by that.
great.
Other than that, everything went well.
Yeah.
And it's definitely an adjustment because, like, you're close to some random people in tight quarters.
Mhm. Yes, it was definitely adjustment. And so we kind of put a kibosh on that, and just started doing it while we were traveling. Again, while we were flipping homes, we had a home that wouldn't sell. We got finished with it around November. The market kind of cooled. So we threw it up on Airbnb and short-term rented that through the winter. We were able to cover all expenses, even including the furniture, and then sold it in the spring. So we've used that strategy quite a bit. I think you guys talk to guests about just being flexible and being able to pivot and thinking through, okay, if this strategy doesn't work, what will work? So we've done a little bit of everything, I think.
So let me ask you this, and then Patrick, I'll let you jump in, man. But I got one more question. So when you did that flip and you couldn't sell it at the top of the market, did you end up holding that for more than a year, or did you, by the time you sold it, did you sell it for less than a year?
Yeah, no, we held that for almost 2 years.
Okay.
This was a flip that we purchased from a wholesaler, so purchased cash. We purchased it for, I think it was $218,000. It was supposed to be a very quick flip. There was foundation issues immediately. So immediately we were 20K over what we had projected. So long story short, we got permits to pop the top. Mike was able to put 1,000 square feet on it. It was our biggest flip to date, largest profit, biggest project, but it was a beast of a project because we just hadn't
Where my mind was
projected that.
going with that is that you guys got to have the long-term capital gains applied to it. So,
Yep.
it might have potentially worked out for the better as a financial decision. I've always wondered that, why
Yep.
flippers don't figure out a way to hold on to their assets for at least 1 year before they sell them. But,
Yep.
it's all part of the numbers game.
That's actually a great point because we've never used the 1031 exchange, which is, say la vie, but we've never done that. And we have had a lot of short-term capital gains that in the last few years have made us pivot our strategy into buy and hold.
Mhm.
So some of the last flips that we've done, we've actually bird them, and now they're the long-term rentals that we have.
There you go. Those are all, excuse me, those are all really great strategies. And I love the beginning of the journey because I think for a lot of people out there, they struggle to figure out how to even get started and if it's something that they want to do. So renting out a room in your house, renting out a basement, all of that kind of gets you comfortable with the idea of doing some sort of real estate,
Mhm.
and then you guys had the luxury of your husband having a contracting company.
Oh yeah.
So let's talk about let's talk about that flip journey a little bit. So as soon as you guys moved from Philadelphia to Colorado and he was starting up his business, did you automatically just start flipping, or did he start working for flippers doing contractor work and you guys then decided to do it yourself? Like, break that down for us a little bit.
Yeah, great question. So we purchased our home, and it took about 5 months for us to get that completely gut and functional. So after that, he started working for another investor actually here in Denver. So he worked for her for several years, being the main contractor on her projects. So because you move somewhere and you lose all your subs, you don't, you have to basically rebuild your business. Again, this is a networking relationship kind of business. So I give him mad credit for doing that, having to basically restart. So he hooked up with an investor, and we actually, started doing very well. And we kind of had the discussion of, well, why aren't we doing this for ourselves? Like, why wouldn't we do this? So the first flip we did is kind of a unicorn story. It was a house 2 doors down from us, and we noticed the people were moving out, and we knew that it was a rental. So we actually wrote a note to the owner because we heard that the owner, who didn't live there, obviously it was a rental, had passed away, and his children were now acquiring the property. So we just wrote them a note saying, I'm so sorry for your loss. We live in the neighborhood. We're investors. My husband's a contractor. We would love to talk about what you plan to do with the property. And long story short, it took about 2 months. They wanted a price that we weren't comfortable doing, knowing what would need to be done to the property. We still kept in touch. We kept it amicable, and they came back to us, and we ended up buying that off market. So that was our first flip, which doesn't happen. Let me just preface that. That is a unicorn story.
That's awesome. So, okay, so now that we're here, let's dive into these numbers a little bit on this first flip. What did you pay for it? How much did you put into it? How long did it take? What'd you sell it for? If you got all those numbers handy, even if they're ballpark, let's just kind of dive into that a little bit.
Yeah. So we purchased that home, I believe, for around 300 and some change. And we were able to sell it for, I believe, almost an 80K profit. And we did a lot. And let me preface this, that it was also the model of our home. We had just gone through a renovation, so we kind of understood what needed to be done. And my husband knows what needs to be done anyway. But the whole footprint was exactly what our house was. So that was very helpful to have that. And that was one of our most profitable flips, just because again, it was in our neighborhood. We knew exactly what to do. Yeah, I'm trying to, yeah.
I feel like you're telling my story because my wife and I, we bought our first rental property, which was 10 houses down from us on the same street.
Yeah.
And, you know, we bought it for 175, put 35 into it, and it appraised for 290. So we
Oh,
almost,
yeah.
we were right there too, about, 85, 90,000 plus on our first deal. And like, coming swinging, hitting a home run on the first deal feels
Oh,
so
yeah.
amazing because then you got the bug, right? You guys were like, oh, we can do this.
Oh, yeah. Oh, yeah. That was a great, again, it was just a great, um, unique situation because it was two doors down. So getting to know your neighborhood, getting to know your neighbors is also very, just a great way to go about this business. Not only do you know who's buying and selling, and, especially we lived in a neighborhood where people had been for quite a long time. We have neighbors who have lived here for 30 plus years. So they really know the neighborhood. So that, again, it was just a great home run. The first one was amazing. Um, and then our second, we actually partnered. This was the only partnership we've ever done. We partnered with an investor that Mike had been working with. She was an agent. I didn't have my license at the time. So we partnered on that. Mike did all the work. He, ran all the construction crews. I mean, again, he did the work he could do, and then hired the plumbers, the electricians. And then she was an agent, so she sold it. And we did okay on that one. I think going into a partnership, it was our first one. We didn't really understand how the contract should be structured as far as equity, because we were 50-50 equity. And
Well, let's talk about that a little bit. Like,
yeah,
how did you structure it, and what might have been a better way to go about it, in hindsight, now that you've gone through that
yeah.
experience?
Hindsight is 2020, right? So in this particular partnership, because Mike was doing the work, I think we should have structured less of an equity percentage for us, because he was doing the work, or we were fine with bringing 50-50 equity, but he didn't get paid for his contributions. And again, she was an agent, so I'm not saying that there wasn't work there. But it's just, again, looking back, I think to structure a deal based on what you're both bringing to the table is just, we should have been a little, done a little bit more due diligence on how to structure that. So it was a little bit fairer.
Gotcha. Well,
I
Um,
understand where you're coming from.
yeah,
Yeah,
right. So
because
it sounds like you might have left a little bit on the table, but that's one of those things that you learn from experience. And it sounds like the
100%.
deal might have worked out well. You just kind of found and learned a way to better structure and organize that partnership relationship in the event that you
Absolutely.
guys do one in the future. Was that the only partnership that you guys did, or did you do any others after that?
No, that was our only partnership. From then on, we kind of just got in a rhythm, doing 1 to 2 a year. Again, because of what Mike's skills brought to the table, our margins were a lot better than a lot of other people. Not only could he do the statement of work and understand what needed to be done so we could really evaluate, is this a good deal? But he could do most of the work. I mean, his bread and butter, he's a carpenter by trade. So his bread and butter are the really high end things, the windows, the doors, the trim, the finished carpentry. So we were really able to add that value and just bring that to the table without having to, have that be a price tag.
Yeah, I think that's awesome. I mean, and those are, like you said, the high dollar, the high ticket items, the things that, take you up another notch to get you that extra 10% on a property. That's where you're going to make, the real nice parts of your profit, which is awesome. So let's fast forward a little bit and talk about when you guys started getting hit with some of the lovely capital gains tax from making all these sweet profits, and why you decided to start holding some of these as rentals.
Oh, yeah. So that has been a challenge in itself, just obviously the tax implications from short term versus long term. But finding a good CPA who understands this is very hard. And since 2015, we've gone through, I think we're on our fourth CPA. One of the CPAs that we had during the time when we made six figures from one flip, he wanted to do short-term capital gains on it. And we caught him and said, we've held this for almost 2 years. I said, oh. So just again, finding a CPA that understands your goals, what you're trying to do, understands the real estate aspect of the tax world has been one of the biggest challenges, honestly.
Yeah, that definitely is. And we have had some tax strategists and CPAs on the podcast. So make sure to go back and listen to them.
Oh, yeah.
Because you are so right. It can get you, in a world of hurt with the taxes, or it can be an absolute
Your best
joy
friend.
when you have the right person and start getting some fat checks back from the government like we did last year. So,
Yeah.
To each their own, but it's an all around encompassing thing when you start getting into the real estate business, when you talk about profits, loss, depreciation, all of these things that we've talked about in the past. And most people don't, you learn the best lessons the hard way, and maybe it doesn't feel like it's the best at the time, but now. So
exactly. And I feel like educating yourself to a point. I mean, I'm not saying go read the IRS handbook or anything, but I think as a business owner, because you have to run rentals, flips, this is a business. You have to run it like a business. So understanding that to a point, I think is the onus is on us, right? The buck kind of stops with the business owner. So I think understanding that, getting educated, listening to podcasts where CPAs are on and calling out things and doing your own due diligence and research is really, again, the onus is with you.
Exactly. And at the end of the day, you're signing the tax return. So
100%.
you're 100% right. So let's get into that first rental. Like, when did you buy it? Why did you buy it? What's it look like today?
Yeah, so the first rental that we have is actually up the street from us. We like to stay within the neighborhood. So we actually, this was the first BRRRR we did as well. We were going to flip this property. And so this is the rental in Colorado. So we were going to flip this property. It got under contract. I think it was March or April of 2020. And we all know what happened then. So buyers fell out due to COVID cold feet. So we just kind of struggled, what do we do with this? So we turned it into a long-term rental. We BRRRR'd it. And we had bought this property cash. So we got out, I think, over $400,000 back when we BRRR'd. And then we were able to deploy that capital elsewhere. And that has been a really good long-term rental. So that's here. The first rental we got was kind of just by us default by moving to Colorado. So it was our primary house, our townhouse. And we decided to move. held on to it, and actually refinanced that to be able to purchase our property here. So yeah, I
I
think it's
love
a
this.
pretty common story. It's, I don't think I was at the time like, oh, I'm a real estate investor. It was more of, hey, we're moving. This is an asset. Why don't we keep this as a rental? It was in a great location. And then buy our house here. So
Well, I think a lot of
yeah,
people
it's a
find
pretty common story.
themselves in that position of becoming the accidental landlord. They've got the property.
Yes,
And if I look back in my real estate investing career, definitely every mistake I've made was selling a property at one point
I
in a
always
in a
say
way
that.
that wasn't strategic or intentional. And the number one cause of that is moving. So whenever you guys are moving, take a look at your property and see if it could feasibly work as a rental. If so,
Yep,
deeply consider that before you decide to sell and move on, because a lot of times you're gonna be hit by so many transaction fees, taxes, commission, closing costs.
absolutely.
It's gonna eat into your returns. A lot of times it's better to just hold it and wait.
Yeah, I
Absolutely. I
couldn't
think
agree
that's a
more.
great point. Sorry, go ahead, Patrick.
No, I was just agreeing. I was just telling James I couldn't agree more. I'd love for you to go with your point there.
Yeah, so with this one, because we had lived there, because Mike was a contractor in the Philadelphia area as well, we had a net. So don't get it twisted. It's not like, oh, we moved and everything was great. We had a network that we already had in place. Those systems, those processes, those, who's going to manage it if something happens. And most of that you can do remotely, honestly, but there were certain things that we needed to make sure of. We had a handyman person that was able to do the annual inspections. We had his mom, Mike's mom, my mother-in-law, actually was a property manager in the area. So I gave her money to help turn over the property when we got a new tenant, because that can be kind of troublesome when you're thousands of miles away. So if you're going to go this route, I think just making sure that you have, hey, a checklist of, do we have a handy person? What would happen if X, Y, and Z happens? Do we have cash reserves for this? Just because you used to live there doesn't mean, there's not going to be costs and things that you have to do. So I think it's totally doable. Just that was just something that we kind of already had in place, so it was easy for us.
Exactly. And I think one of the biggest things that, you're bringing up is like, hey, look, there is things that you need to have in place, but it's not that big of a deal to
Not rocket
figure them
science.
out. Like, it's not the end of the world. It's, hey, let's give it a shot. Worst that could happen is we have to sell the place, but you already have a network of people that can go in and fix it up for you while you're thousands of miles away. So like, you know,
Absolutely.
it's it's just going ahead and figuring things out, which I think is great. So now we've got the rental in Philly, we've got the rental down the street.
Yep.
Okay, I think you have a couple more. So let's
Yep.
let's continue the story.
Yeah, yeah. So we have the rental up the street. We have another condo. That was our first turnkey. We bought that in 2021. Um, and that's been a great rental as well. That's probably about 2 miles from our house. And then we purchased a house last year in June, off market. We purchased that for 420 and turned that into initially a short term, and now we've turned it into a midterm rental. So all in all, we have 4 rentals. They're netting about 4,500 a month.
That's fantastic, and that's with the midterm rental
Yep, that is with the
number.
midterm. Um, it is again in the summer months, we can get a little bit more. But yeah, we kind of had a rocky start to that. Just because we thought we could short term, then the rules kind of changed. So we turned it into a midterm. And yep, that is with the numbers. Short term rentals don't always produce, triple the amount. It depends on location. This location is good. It's just a nice clean house. And it's
Yeah,
definitely cash flowing more than a long term rental. But there are additional costs in,
Yeah.
midterms. So just keep that in
Well,
mind.
I mean, I have to hone in on the fact that, with these 4 rentals, you're able to bring in $4,500 a month. I don't know about you, but the average person, if we're talking about like the average mortgage, let's just call it from majority of America, let's just say it's $2,000 a month.
Yep.
Okay. The average car payment, $500 to $600 a month with insurance, your cell phone bill, groceries and all that, you know, it, that 4,500 is going to cover majority of people's, living expenses. And it only took you a couple years with 4 properties, right?
Absolutely. Yeah, I think that's a great point. And again, we're on the FI train, so we live pretty frugally. Again, we were doing the short-term rentals at our primary when we were traveling. So that number, that net doesn't even include when we do that for our house. Last year, again, we made over $20,000 by doing that. We haven't done it a ton this year, but yeah, I love that point of you don't need 45 doors. But if that's your plan, if that's your goal, great. But you both have reiterated that one door can kind of change your life. So keep that in mind. And something that my husband always likes to point out, I'm not attributing to the appreciation all of these homes have gained over the past several years. I think it will slow down a little bit, but we purchased at X amount and they've appreciated at least 4 to 20 here in Colorado percent a year. So that's another thing to consider as well.
Well, I think that's great. And I think it's important for people to look at it as a basis of covering your cash flow at least, and then appreciation on top. That's just kind of gravy. I know we've been in a really hell of a bull market with real estate, since COVID started. But as we saw in 2008, might not always be best to bank on that in perpetuity.
Yep.
You never know what happens. So
100%.
It's great to have that, as a couple years later, you kind of think like, oh man, I've got a lot of equity in this property. I can refinance it. It's going to cash flow, buy the next property as well. So, you're right. I mean, it can take one property to make a huge difference. And something I'm still, trying to wrap my mind around with what you're saying is how you can really rent out your property while you're living there on a short-term basis. Like that's not something I've really thought through, but would be a super simple thing to do just to make a couple extra $1,000 a year. And it's such an easy thing to implement.
Absolutely. We actually had midterm rented a room in our house a couple years ago. Just a friend had their brother who was moving to Colorado who didn't want to sign a year lease. So we said, okay, we'll give him 3 months for X amount. So it's a little different than just a stranger living with you, but it was still just, thinking through, hey, we want to cover some of these expenses and have somebody else pay them so we can travel or save a little bit more or allocate that money that you would be spending living somewhere else. So it's just thinking a little different.
I don't know if you've given this much thought, but have you kind of calculated, and I'm just curious because you're very financial independence motivated and mindset oriented, what your savings rate is generally, and maybe was while you're working at your corporate job?
So my savings rate while I was working was almost 50% of my take home. So I was, again, aggressively saving. We have reached our FI number. That being said, a lot of that is in the net worth with the real estate as assets. So again, with that cash flow, I'm still very mindful of, okay, what are we spending every month versus what are we making every month? And trying not to dip into too much of that savings.
Mm-hmm.
So
I love that. So like explain to us like what that is. Like what was that financial independence number? Is is that the lean FI? Are you going for, are you trying to increase that a little bit more? Like let's get into that a little bit.
Yeah, great question. I've been thinking the same thing because again, 2021 paycheck stopped. I quit corporate America. I'm an agent, so there's commission. Mike is a contractor, so while he's doing our flips, he's also doing some jobs here and there for referrals. And so again, savings rate was about 50%. The paycheck stopped. So we hit our number. And the way I think about that is 25 times what you're spending in a year having in your investments. And our investments include real estate. So not as liquid as a Roth, as a 401, as a HSA, I mean, all of these have tax implications if you borrow from them, but our number includes the properties.
Okay.
So
So how do you
oh
come
yeah,
up
go
with
ahead.
the 25 multiple?
25 times.
So like
Okay.
what's the rationale for that?
Yeah. You're like, what are you thinking? So I follow Paula Pant. I don't know if you've ever heard of her. She's in the financial independence community. Mr. Money Mustache. I don't know if
Oh yeah,
that
very
name
familiar.
rings a bell. Yeah, so that's a formula that they've kind of put out there. And it's basically if you withdraw 4% of that number, you will be financially okay, because you're only spending X amount per year. So you have to be pretty, not stringent, but pretty, you have to understand your numbers of what you actually need in a year to spend, times that by 25, which can be quite large, right? And then again, if they're in index funds or a brokerage account, you can draw down on them, and 4% is probably a conservative amount. You should be able to live off of that and be financially independent.
Right.
Exactly.
So
Yeah, that
you
makes a
can
lot of
think of
sense.
it kind of as a dividend to yourself, like you're going to
Yes.
try to, aim for having a 3 to 4%, pay rate for yourself. And guess by maintaining that principle, you're still going to have something that's going to continue to grow and give you that buffer in times of maybe economic turbulence or whatever. Maybe the real estate market slows down and, you still have
Absolutely.
something to weather the storm.
Absolutely. And again, because I was in corporate America for almost 20 years. So I maxed out my 401. I have a Roth. I have an HSA. I have a brokerage. And now that we have our own business, we have a solo 401k. I mean, I was very heavy into the investment side of things, beyond just real estate. I think it's important to diversify, whatever that means to you. Maybe that's diversifying your real estate portfolio, because I think that's good too. But that was just part of our journey. And it's honestly, if I'm being transparent, it's been kind of challenging to wrap my head around, okay, but real estate isn't as liquid as the other things. So yes, net worth is X, but it would take a minute to sell that, and I don't want to get too far over my skis with what we're drawing down in savings, because also I'm a big proponent of an emergency savings, a CapEx savings, a fun savings. I mean, you have to a tax savings. So I'm a big saver. So it's
I
been
love that.
challenging to like wrap your head around, okay, well, what does this mean now that I'm not W-2 anymore?
Right.
Yeah.
Well,
And,
it's
and
good to have some foresight with that because I know, you say tax savings. I know I get very upset with my CPA every year that year comes, the time of year comes around. I'm like, man, why did you tell me? He's like, you do the numbers. Like this isn't
Yeah.
a surprise. So, always have the money, but I just
Yes.
need to keep it up. But it's good to
And
have that set aside for sure, 100%.
absolutely every flip, every commission I get, I set aside what I think my tax rate will be and just put it in a high yield savings account. So I don't even like think about it. I
It's
mean, I
safe.
think about it too much, but it's just there.
yeah, that is fantastic. I mean, I love the whole thing of 50% savings while you were at your job. Like making sure you're maxing out all of your retirement accounts and all of that. So when that time comes, when you do quit, you have a solid financial foundation, which so many people listening to this are looking for. So
Yep.
it's extremely important. And now kind of what I want to get into is, now that you're here, what is the goal? Is the goal to sit back and chill? Is it, are you guys like, hey, we've been doing 1 to 2 flips a year. Our goal is to hit, 4 or 5. We want to acquire 1 or 2 rental properties every year. Like, let's talk about what the overall goal is, and if you're looking to increase that 4,500 a month number to, 9 or 20 or what.
Yeah, Patrick, great question. What is going on? So time freedom was really why we wanted to be on the FI journey. So I think doubling down on the business that we're currently in. Again, I'm an agent. I help currently helping 1 or 2 buyers look. So I think really investing more in that. We would love to get into a lifestyle real estate purchase next, either that being somewhere in the mountains where we want to be and spend time, or potentially in Wilmington, North Carolina, we've been looking into because we have family there. So I think now that we have a lot of things covered, potentially selling one of the assets that's just okay, leveraging that into somewhere where we want to be, and spend more time. One of the goals I had actually this year was to be a ski bum. That was just a goal. I'm like, hey, I don't have a W-2. So that was a goal, and I skied 32 times this year. So I think I accomplished it.
Yeah, that's absolutely fantastic. And I think, I love how you're orienting your goals at this point towards lifestyle and happiness and living. It's not all about getting to that next unit. You want to be a ski bum. Like that's totally cool. You're going to be able to enjoy the time the way you want to do it. So I think that's absolutely fantastic.
Yeah. And I think honestly, one of the things that I would like to focus a little bit more on is giving back. I consider myself a content creator, a marketer. I give a lot of free content out on my website, on social media, because we're not taught this stuff. I mean, you guys are prime examples of giving back in a way that you're having people on who are talking about this stuff. We weren't taught this. So I think finding more of a purpose and being able to give back and educate, I think is also definitely on my list of, what I want the future to hold for me. And I don't know exactly what that looks like, but I, have some real estate meetup groups that I host. I do a mastermind with a colleague. So just giving back a little bit more and trying to educate people as much as possible about what is possible.
Yeah, I mean, I think that is absolutely fantastic. And, staying on that kind of topic on giving back, you know, um, if for someone that's looking to, or is on their journey to hitting their FI goals, or on their journey to get their first real estate deal, like, what's the one piece of advice that you would give that person that's listening right now?
Yeah. So I think if you're looking for the financial independence track, I think getting a handle on how much you actually need to live on is really important. And it is a subject that most people don't want to talk about. Like budgets, boo. I mean, nobody wants to sit and track this. But I think it's really important to understand how much it takes you to spend in a year, or how much you need in a year. So I think getting a handle on your expenses is one of the first things that I would suggest for somebody who wants to go down the financial independence train. And that probably goes for real estate too. I would start going to meetups. Meetups are a wealth of information, of just free information, and get specific about what questions you have, because guaranteed you're going to find 7 people who have either done it, who know someone who have done it, who is an expert in it. Listening to these kind of podcasts is amazing, because again, you just kind of realize what's possible. And then house hacking. or having a roommate, buy a house that you can rent out a portion of, and make sure that you're running your numbers there too, just in case, say you don't have a roommate for a month or two, would you be able to cover that? But I think those are two like huge things, just understanding how much it actually costs you to live. And then just start educating yourself and don't get caught in an analysis paralysis. So I find that
Yeah.
too.
I feel like
Yeah.
that,
We've all been there.
that's great advice because I was actually playing with some financial independence calculators yesterday. I realized I have no idea how much money I'm spending. Which, I think at this point, is a big mistake. So it's something that I personally have to get on board with reassessing, reanalyzing. Like,
Yeah.
I've gone through these phases of really tracking it. I've got a ballpark idea, but it's been a while since I sat down and really calculated it and
Yeah.
set a good budget for expenses. So it can happen to everybody. It's not something you just do once and like set behind you.
Totally.
Because lifestyles change, your life change.
Totally.
I've had a child. I probably haven't done it since I've had a child.
Yeah.
It I'm kind of terrified now at this point to like add up the diapers and the food and that on
Kids
top
are
of the
expensive.
yeah, tell me about it. But yeah, I mean, I think it's somebody that everybody at every point in their path can like sit down
Yes.
and have an appreciation of, is knowing what you're spending, because that's going to dictate exactly how much you need to retire at whatever point in your life that you're planning to do it.
Yeah. And I think it's a mindset shift. I think it's just, if you do understand, it might be less than you think. It might be more than you think, but just understanding it, I think then you can make informed decisions. And there are so many free tools out there to do that. I personally use Personal Capital, and it basically aggregates. I mean, you have to connect your accounts to this, but it basically aggregates and gives you an overview of what you're spending, and it breaks it down by category. So that's really helpful. Like, I don't know how much I spend on groceries. Well, you go in there and see, oh, okay, I spend this much. And again, it aggregates it for you. So
Personal Capital is great. I used it for a period of time and then I stopped using it, but it was great for that function. And like, it really
yes.
did break down what you're spending your money on, and gives you a really hard realization every time you look at it. So
Oh yeah.
I'm not gonna lie. I did it. I was tracking for a good bit of time, and then once we kind of hit a certain cash flow number, I completely just stopped doing it. And now I just tell Danielle, listen, we do not have a spending problem. We have a making problem. So we need to buy more properties.
Yep.
If don't come to me and talk about the budget,
Love
okay?
it.
We're going to go talk about more opportunities that we're going to
Love
go
it.
acquire more cash flow. Okay. And that it was like, as soon as I kind of got around that number, and this was before I left my job, but it was before I left the job where I'm like, hey, if I were to leave now, we'd be okay. And then we doubled that. And then that's when I left. And now it's to the point now where it's like, I technically am not really worried about it too much. Not to say that, we just spend frivolously, but now it's to the point now where it's just more focused on acquiring more, buying more,
Love it.
because we want to get to that lifestyle part, but we're
Totally.
still a few years out. You know what I mean? Like, so, and everyone's on their journey differently. And that's why I really love, having your perspective on this, of someone that's like, hey, I've hit my number. We're really comfortable with where we're at. This is totally fine. Like, our goals are more aligned with lifestyle things, buying a place in the mountains, buying a place by the beach, maybe just skiing more, and really enjoying life. Because
Yep.
a lot of people, I think majority of people, have a target that's so high that
Yeah.
they feel like it's going to take them forever to get there.
Impossible. Yep.
And you're like, hey, as long as we can just cover where we're at now, like, let's celebrate.
Yes, absolutely. I follow, I don't know if you've ever heard of Ramit Sehi.
Mm-hmm.
He basically, exactly what you just said, Patrick. There's a limit on what you can cut, but there is no limit on how much you can make. And that's a philosophy he touts all the time. So I love how you're like, we don't have a spending problem. We need to buy more. We need to buy more cash flowing assets so we can get there. So I think that that's a huge lesson, making sure that you're living your life now, but don't limit yourself to just like, oh, I need to cut everything. I need to live on ramen noodles. Just make sure that, you're accounting for the fun things too.
Yeah, I think that's something I got to focus on, and that's why I love talking to Patrick, because he grounds me. Because I do have a tendency to have some of the scarcity mindset
Ooh,
things that I think that's just natural. But I think everybody can work on that abundance. Like, I talk to my wife all the time, like, oh, we want to do this, that, or the other, and I've caught myself going from we can't because to switching that framework to we can if we. And
yes,
then
love
finding
it.
a way to make more money, finding another transaction, finding another prospect for a client, doing another deal. So it is a mindset shift. But
Oh, it's 100%.
speaking about that, like, why don't you tell us a little bit about your fundamental motivations for, what you have going on with your life and why you're striving so hard for financial independence? Like, what is really motivating you deep down for all these lifestyle choices?
Yeah. I think the why is again just time freedom. Being able to do something that you enjoy. I think a lot of people in the FI community have that philosophy that I don't necessarily want to sit on a beach and drink rum punch for the rest of my life. I want to spend my time doing things I love. And real estate really is that for us. We also bought a truck camper a little over a year and a half ago. So we're really into getting outside and doing a lot of mountain biking, a lot of skiing. We have a lot of friends who do these activities as well. So just getting out and living your life. We've also been able to do lifestyle projects. So last summer or last spring, we were able to go down to our friends' property and live on their land. And Mike helped them convert a cabin on their lands to an Airbnb property. Like we were able to do that because we have time freedom. So these projects, we have the flexibility to do these cooler projects on our, whim. If we don't want to do it, we don't do it. If we want to do it, we do it. We have the flexibility and options to do projects that we like.
Yeah, that is so awesome. I love that so much. I love the time freedom answer because I think that that's 95% of the people out there. It's not, the millions and millions of dollars. It's just being able to do what you want to do when you want to do it and not having anyone to answer to besides yourself. And I think that's really the simplest form of what majority of us that are listening to this podcast that are
Yeah.
out there trying to accomplish these same goals are really, really after. And, I want to get into, what obstacles you see you and your husband facing, not only just this year or the coming years, but the future of your journey,
Yeah.
of your living with that time freedom. Like what obstacles do you see yourself facing that might set you back?
Yeah. I think one of the major things we kind of hit on the mindset, still keeping in that mindset, that abundance mindset. So even though, you're not having that W-2, there is money coming in, you did save, you did all of the things. But I have a very hard time with, well, what is enough? My husband and I have different money philosophies, and he's much more of an abundance mindset. And I have that problem with the scarcity mindset of just, well, we don't, well, what about this and what about that? So I think working on your mindset is huge. I know a lot of people talk about that, or maybe not enough people talk about that, but that is a real thing. If you have a scarcity mindset now, financial independence will probably heighten that. So just, once you reach your number, because it'll potentially never be enough. So mindset is really something that I'm always working on. Inflation obviously is just something that is a current factor. Are those numbers that I projected going to keep pace with inflation? I think that's where I struggle with drawing down too soon. So we haven't even touched any of that. But just inflation is a real thing. And I think we just need to be mindful of what's happening in the economy. And then just managing our time, being good stewards of our time. Sometimes it can be an obstacle. You have a lot of time on your hands, and making sure that you're filling it with, you say you want to go do these things. Are you making sure you're doing those things? Um, I had challenges with that while I still had a W-2. I made this thing called the effort list, basically like, what would I do if I didn't have to work? And I made a list of like 200 things. I mean, this was years and years and years ago. So making sure that now I have the time that I'm doing those things, instead of just, you know, grinding at the things that might not be as important.
When you talk about inflation, I think that's important for people to realize, because I've noticed when I've taken a look at some of these like financial independence calculators,
Yeah.
they never factor it in.
Factor
I had to
in
build my
that.
own spreadsheet for that, and honestly, it's terrifying. Like
Yeah.
when you put in inflation and like an estimated increase in like your earnings per year, like if you're really not increasing the amount of money, and like I got to break it to you, like 2-3% extra pay raise if you're at a corporate job isn't going to
Not
cut it
going to do it.
in this inflation market. So when you put inflation 5, 6, 7%, what it is right now,
Oh, yeah.
those earning increases, like it's a hamster wheel. So you have to find ways to really increase your savings and the amount of money you're bringing in. So for anyone that's listening, if you want that calculator, find a way to message us, message me. I'd be happy to send that to you, because it gives you a real and nominal, determination of how much money you need to save to get, reach that FI number. So I think it's really important that people cue in on that.
Oh, absolutely. Yeah. And consumer goods here in Colorado have gone up like 12%. So again, it's just being mindful.
Guys, I love it. I love it. I love it. And I think with that, this is a perfect segue into the last segment of the show that James and I like to call the Big
Big Four.
Four. James, take it away.
All right, Catie. So tell us something that you do that is a financial independence hack, something that's a cheat code for your personal finances.
Yeah, so I think I'm gonna go with renting out a portion of our home, especially when we were traveling. I think this was, again, it's not a, there's things that you need to do to prep for that, but I think that was just mind blowing to understand how much we could make, and cover living expenses. So renting out a portion of my home, I would say would be a cheat code.
Nice.
Yes, a fantastic cheat code. And almost anyone out there like has the ability that owns their own home to be able to do that and unlock, some potential to pay down some credit cards or take care of at least one expense they have that month, to lessen the burden to help you actually save money for the things that you really want. So I think that is an
Absolutely.
amazing hack. And you're the first person to mention that on the show. So
I'm gonna mention a tangential benefit to that. You always keep a cleaner house when you got people coming by randomly. So that's another cheat code, that can kind of apply there.
there
Love
we
it.
go. There we go. All right, number 2. So we call this one resources. So are there any books, podcasts, or people that you think our listeners might not have heard of, that would benefit them along their financial independence journey?
Yeah, I love this because, again, resources, and they're free. I mean, go to the library, listen to these podcasts. There's so many free resources. So I kind of broke it down into three areas. So mindset shift, we talked a lot about that, which I think is so important. Lessons from a Quitter. This is a podcast. This basically helped me quit my job. You Are a Badass. That's a book. Jen Sincero wrote that. Atomic Habits by James Clear, because every action you take is a vote for the person you wish to become. That's what James Clear says, and I love it. And then I Will Teach You to Be Rich by Ramit Sethi. So he talks a lot about financial, but it's also the mindset shift of how we're thinking about money. So if we're going into the financial, Stacking Benjamins. This is a podcast that is just amazing. There are financial experts on there. The Choose FI podcast is another amazing one. And then Afford Anything by Paula Pant. She has great guests on there. You're able to call, she has callers call in. So that is a podcast as well, and that's amazing. And then I had one more category in the entrepreneur category, because owning your own business and being an entrepreneur is not as glamorous as sometimes I think people think. It's very hard to do. So two podcasts I listen to, The One Thing. It's like based on Gary Keller philosophies. And then It's a Good Life by Brian Buffini, both podcasts.
All right. Well, for any
That was a
future
lot.
guest out there, that come on the show, you now have extremely high expectations for your recommendations for our listeners out there, because that was absolutely amazing. And I now have an entire list of things that I need to start looking into. So I greatly appreciate that.
Of course.
James, number 3, take it away.
Catie, 5 years from now, it's in the future. Where is your life personally? Where's your life with your business? Like, what is everything looking for Catie and Mike 5 years from now?
Yeah, I think we have streamlined our portfolio to include potentially one rental that's cash flowing enough to cover our living expenses. And then we have additional lifestyle real estate, meaning we're either there a portion of the year or using it sporadically because it's where we want to be. Still researching those things. And something else, I finding more of a purpose of giving back. I think we talked about this a little bit, but I would really love to make that more of a concrete thing. Like, what does that look like? Potentially coaching or a mastermind group or something where I'm really giving back, because I think finding purpose is huge. And again, I have it right now. But just when you're less wrapped up in your work, I think it's more of feeling that, okay, well, what does bring me joy? So I really love giving back to people, and this kind of education I think is just not out there. And accountability is hard. It's a huge part of why I think, coaching or finding groups that, are aligned with your mindset is something that I definitely want to get into.
Yeah, 100%. And I do want to second that in having more freedom to think about my own life and what's going on in my daily world without having to worry about some other company or manager or whatever that else is going on, has opened me up to think about the same things so much more on a regular basis on, not what is truly going to continue to make me happy, my purpose on a daily basis, and not just now, but trying to set the foundation of that up now for the next 5, 10, 15 years out, whether that's starting a foundation, whether that's doing some other things that really actually, bring some purpose and just some overall good feelings inside.
Yeah.
You know what I mean?
Yeah.
Like, so I love that you honed in on that. And it's so special, to hear that it is giving back that really matters and helping other people. And that's why we started this podcast, selfishly to help
Absolutely.
ourselves. But now it has such a bigger purpose on helping other people. So I think that's
Absolutely.
awesome. James, you got anything before we send this off?
I think we're good, my friend.
All right, guys. Well, for our last question, for anyone out there that love this podcast, that wants to reach out to you, talk about all the amazing recommendations, tell you about your story, and just follow you along on your journey, where's the best place for them to reach out to you?
Yeah, you can find me on Instagram at happy_homes LTD. I'm pretty active there and respond to messages, or if you have any questions, I'd love to hear.
Awesome, guys. Well, you guys know the drill. This podcast is free, but not quite. All we ask you to do is hit that like button. Go ahead and make sure you're subscribed. Spotify, Google, YouTube. Leave us a review on Apple. Leave us a review on our website. Have you been there yet? www.therealfi.com. You can leave a review there too. Send us a DM. James and I are doing this to bring amazing guests just like Catie every single week. And we need that feedback to know that there's listeners out there that appreciate this. So if you could do that for us, we'd be greatly appreciative. And we'll catch you next time. See you guys.